And today discuss preparation of and presentation of audit. And already we are discussed in the previous class in how to prepare of the income from house property and how to calculate the incidence of tax. Then it is also one of the important concepts of the audit. Then it is easy to for making of an audit. And then we are discussed of these the various important stages of the audit. Then we choose audit. Yeah. Yeah, this is Vivek Dharmendra, Assistant Professor, Department of Commerce and Siddhartha College of Arts and Science. And what is audit? It is just as a verification. It is derived from a Latin word adhere. It means to hear. Actually, it is introduced in 18th century for the scale of for development industrial purpose to verification of records and other things. Now, the definition of the audit is also provided with many definitions of the auditing as provided by Spear and Pledge. The such of examination, many members are conduct the examination, the number of ways to conduct the examination. It is also provided the ICA, Indian Institute of Chartered Accountants. Auditing, it is an examination of financial issue information and legal entity. It's also it's discussed the various aspects. So, in many of the in some of the members also may be defined as audit. It is a systematic and scientific examinations, verification of accounts, books, and documents. So it is very easy to examine these three items are conducted. Sir, here we are conducting the financial, we are preparing the financial account. Why? Because how much the profit or loss during the year. And we have prepared the balance sheet and how about of the financial position of the balance sheet. Then we are discussing the duties of an auditor. The main important duties of the auditor to check the mathematical accuracy of the accounts, to check the books of accounts with the help of the all relevant virtues, and to verify the P&L account and assets and liabilities in the balance sheet. And finally, the auditor prepare the report to analyze of the company or industry. Now we discuss the what are the features of the auditor. It is, and we are already discussed the examination of the accounts of the business. Why we are examining? Here we are examining the accuracy, and it is done by independent by person or body of the person who has qualified the job. And it is also verification of the result of the profit and loss account and effects of the balance sheet. Then it is a critical review of the system of accounting in internal control. And what is the difference between bookkeeping, accounting, and auditing? The bookkeeping, it is the duty of the bookkeeper, just completion of the recording of the day of transactions and preparation of the journals and ledger. And these are the duties of the bookkeeper. And accountant, they are prepared trial balance and preparing trading and P&L account and prepare the balance sheet. Now it comes to the auditor. These are verified. All the transactions are correct or not and verified and prepare the report. Now we have discussed one of the important contents are objectives. Why the objectives are give the priority. Here we have two types of objectives of an audit, and primary objects and secondary objects. Primary is compulsory. Why? It's what about of the exhibits are available and true and fair view of the earnings of the finance statements. And second one, two accounts are complete, correct, confirm, correct or not. And secondary objects are many misappropriations of accounts, goods, and cash, and deductions of errors and faults. Now, Which type of errors are made? They have several types of errors. The first one, generally, sometimes we are omitted the transactions and error of omission and error of duplication, error of commission, and error of principals. The secondary frauds. The frauds are maybe in three categories. That is the misappropriation of cash, goods, and documents. Sorry. The prevention of errors of goods. It is one of the major objective of the auditor, how to detect the errors and the types of audits. Audit are divided. The types of audit are based on the organization structure, based on the scope, and based on the time. And these are the main important. What is statutory? Statutory means compulsory. It's prescribed under statute, means as per law, or appointment of auditor, or removal, or remuneration and rights and liabilities of the government provisions of the respective. And these are mentioned the scope of the audit. And conductor of the preparation of the financial statement, the statutory auditor also shows as a shareholders. Then immediately shows to government audit. The government maintains a separate department in the name of the accounts and audit department, which performs the audit of the department, different departments of and departments and office. This department is here by the controller, not control, controller and audit general. Already we discussed CAG, COG, and these are the keywords of the COG. And there's a non-statutory audit and private audit. These are also, they are verified firms, sole trade, and etc. of the proprietorships. They know about the financial statements of the company and provisions. The private audit are also provided the bodies of the owner arrangements and run their own interests so that the accounts are closed by. And audit was of scope, complete audit, partial audit, detailed audit, and continuous audit, and routine audit, internal audits. Audit on the basis of the object, and so it is one of the important, the cost audit. It is the type of the audit which involves the verification of the cost recorded maintained by the organization under Section 223 by subsection B of the Companies Act 1956. The central government may direct an audit of the cost records by persons who are qualified and appointed of auditor is done by the board of directors subjected to the approval of the central government. The following of the objects are compulsory following to grant the price or concession of the company, fix of the selling price and so audit on the basis of objects, management audit and internal audit and the guidance of the ICSI audits. These are the one of the case and audit on the basis of the object is one of the important categories of social audit. The social audit is a recent development in the field of the auditing and the base. It is a base of the modern concepts of the social responsibility of the business because of audit are examines what extent the business is discharging its social responsibilities. It examines the contribution of the concern of the society for large considerations. And one more thing, audit on the basis is tax audit. It is the Indian government introduced the tax in 1961 as per tax provisions and other types of audits, environment audit or provincial audit. Audit procedure. It is determined by the work, knowledge about of the business, and instructions of the clients, and preparation by the audit and procure of the auditor review. Adoption of distinguish ticks. If it's completed the audit, just put the tick mark. The tick check whether the audit are check or not. In case it's completed, the audit is the tick mark. Whether the tick is not completed and it's not complete the audit. That is a test checking. And there are also mentioned that depth. And one is the most effective measure in the audit is watching. Watching of cash transaction and main objectives of the watching, collecting official related of it is also the related transactions of maintain evidence. If you are maintain the evidence for all recorded in the books of accounts, if you are not maintain these vouchers, and of course, the business are not as a related, and the types of vouchers, primary voucher, controller voucher, some of the examples, cash receipts, cash payments. In the cash book side, we are receipt side mentioned as a debit side as receipts and credit side is our payments. Cash sales, if how to receive in cash terms are cash receipts, and when way of the expenses are paid in credit side are cash payments. The cash transactions. When you have received any types of cash or check, that all are cash transactions. And one thing, and here we are also recorded watching of the trading transactions. This involves of the watching of purchase book, purchase returns, sales book, sales returns, bill receivable, bill payable, journal book. And it's also we are called as subsidiary books, except the cash book. One of the most important talks, verification and valuation of assets. Why we are verified, where we are verified. Verification means to prove these true about the correctness and authenticity. What's where we are verified? We are verified assets and liabilities of the company and the business. So these are the main. If you are prepared in balance sheet, sometimes we are posted the information of the assets and liabilities. So generally uh, means if you are posted the buildings and purchase of 10 lakhs, where is the proof of the purchase? There is or compulsory maintain the documentary evidence. So some of the payments are not maintained the cash items. And on the particular time, they are also maintain the vouchers. And here verify. These are compulsory we maintain in the books of accounts or not. If you are prepared and maintain the books of accounts and how much the charge of the rate of depreciation and how to maintain the purpose of the verification. And controlling our main generally is divided internal control and external control. Before we are controlling of the internal, just checking of the business, internal check and internal audit. The internal check means partially is continuous of the internal conductor checking system carried by on of the behalf of the staff. Self it means it's an individual independently checked by member of the staff. And what's the main objectives of internal checks? It is to allocate duties and responsibilities to everybody and to minimize the possibilities of errors, frauds, and one more of the to enhance the efficiency of clerk in the business. And it's also very easy to prepare the final accounts of the business. And it is one of the easy. What is the difference between internal check and internal audit? it is arranging of duties, it is independent review. And it is also the one clerk automatically independently checked by another. But internal audit is the work of the clerk checked by internal auditor. And these are the principles of the internal check and one as continuous internal audit. And yes, of course, the difference between internal audit and independent audit. And these are the sessions and these are the highlights. The contents of the audit report, it is also one of the important. Means if you have prepared all reports and documents and the verifications, these are submitted to the authority and directors of the company. Compulsory, you have maintained clean and and qualified report and contents are compulsory. And thank you for your the valuable time. Thanks for very much. Thank you.